Everyone, Larry Bailey here with Awesome Technologies Inc., bringing you this week's newsletter. We're going to review the events from May 6, 2024, but before we do, I want to ask you to please go to awesometechinc.com. You'll find all kinds of information in there to help you with your mortgage operations, especially if you're using the Encompass platform, or the Meridian Link platform, or the Byte platform. I also want you to take a look at what you're doing for your commissions bonus plan in terms of calculating compensation. Our product that specializes in that is called Encompass, and it is unlike anything else you might have used, especially if you're using paper or Excel sheets, or you're using some other type of payroll processor to manage the important things like calculating your proper income that you have to pay out for things like commissions and bonuses. For tiered plans, it handles draws and clawbacks and all kinds of really awesome stuff when it comes to managing your money, when it comes to payroll. So check it out over there. It's called Encompass, and I want you to know about it. And regardless of what industry you're in, it actually will apply to you. It's not just made for mortgage companies. It's made for every company. So let's get into these stories. Again, this is for the week of May 6, 2024 in a review. And strong home price appreciation demonstrates the opportunity that remains in the housing market. I've talked about this a lot. And while unemployment claims saw a breakout, plus what we might find ahead for consumer spending, we'll see. Here are the headlines. First one is opportunity in housing remains strong. The next story is initial jobless claims hit a 9-month high. And the last story is all about is consumer spending headed for a slowdown. Now the first story where opportunity in housing remains strong, this is all about appreciation. And so CoreLogic's home price index showed that home prices nationwide rose a strong 1.2% in March after rising 0.7% in February, showing that home price appreciation is not just continuing, it's accelerating. Prices are also 5.3% higher when compared to March of last year. CoreLogic forecasts that home prices will rise 0.8% in April and 3.7% in the year going forward, though their forecasts are typically on the conservative side, so we might see even greater levels of appreciation. And of course, this depends on where you are. Like, keep in mind, this is a national average. So your area may be well higher than that, or maybe even well lower. Black Knight, also another company that is owned by Intercontinental Exchange at this point, but they also reported that their national home values rose 1.2% in March, with their index showing that prices are 5.6% higher than a year ago. Bottom line, gang, the latest rise in home prices reported by CoreLogic and Black Knight echoes the strong growth seen by other major indices like Case-Shiller and the Federal Housing Finance Agency, also known as FHFA. These reports continue to demonstrate why homeownership remains an opportunity for building wealth through real estate. Couldn't agree more. Initial jobless claims hit 9-month highs, the next story. And here we see initial jobless claims rising by 22,000 in the latest week, reaching their highest levels since August, as 231,000 people filed for unemployment benefits for the very first time. Continuing claims also rose 17,000, with 1.785 million people still receiving benefits after filing their initial claim. So the bottom line here is the jump in initial jobless claims is a breakout for this metric, as it has been extremely stable at low levels for the last several months. And that ranged between 208,000 and 213,000 in 9 of the last 10 weeks before this latest report. Continuing claims are also still trending near some of the hottest levels we've seen in the recent years. So the data follows other recent reports which also suggest softening in the labor sector, such as the weaker than expected job growth in April, declining job openings, and the low quit rate. The next story is consumer spending headed for a slowdown? Now, I can tell you in my own personal pocket, the answer is yes. I actually went and looked at this over the weekend. I have oil. I heat my house with oil. And so I looked at, okay, what did I spend over the last 12 months, and what did that look like the previous 12 and 36? It actually is reducing, and that tells me that, that's just one metric, but that just tells me that, we're doing everything we can to try to save money because things aren't getting cheaper. So, that's just my personal story. So the most recent consumer spending data for March was strong. Core retail sales were up 1.1% and the personal spending up 0.8%, aided by the pandemic savings from the stimulus and credit, but there are signs that this support may be coming to an end. In a recent article by San Francisco Fed analysts revealed that, quote, American households fully spent their pandemic-era savings as of March 24, close quote. Meanwhile, credit card debt hit a new record high in the fourth quarter of last year, with balances reaching 1.13 trillion. That's with a T. Holy goodness. So, according to the New York Fed's quarterly report on household debt and credit, we've also seen growth in popularity in the Buy Now, Pay Later. That's a BNPL programs. Buy Now, Pay Later. I've been using PayPal's Buy Now, Pay Later now for many, many years. It's interest free. You get like 6 months to repay things. Yeah. So if you didn't know about that, go check that out. But yeah, it's a great program through PayPal. Assuming they still have it. I don't know. Maybe I'm grandfathered. Who knows? But the BNPL options are not showing any signs of, are also now showing signs of stress. So yeah, people overusing it and then running into interest, because that interest will come back and really, really hurt you if you're not ready for it. So a recent survey conducted by Bloomberg News for the Harris poll found that 43% of those who owe money to BNPL programs were behind on their payments. Also within the survey, it showed that more than 50% said they bought more than they could afford, and over 1/3 said they turned to these programs after maxing out their credit cards. That's not good. Meanwhile, 24% said their BNPL spending was out of control. Bottom line here, gang, is consumer spending makes up 70% or so of GDP, so a slowdown would be significant and could point to a slower U.S. economy, weaker inflation, with lower interest rates from the Fed. And while this will take time to come to fruition, it will be important to analyze upcoming data for signs of softer spending. So, Family Hack of the Week, May 15th, that's in a couple days here, it marks National Chocolate Chip Day. Come on, what kind of day is better than Chocolate Chip Day? So if you want to see this recipe, get over to mortgage.community and check it out online. You'll see the whole recipe here. It's really, really good, and it sounds really good, and my mouth's watering. Which brings me to, if you're listening to this on podcast, thank you. Sincerely, thank you for watching or listening to us on podcast. But if you want to watch the full video and you can see what's on screen, plus a ton of other videos and other information for you, get over to mortgage.community and check it out. Here's what we're looking for this week, gang. We'll see crucial readings on inflation when the producer and consumer price indexes for April are reported on Tuesday and Wednesday, respectively. Key housing data will also be delivered, starting with this month's builder confidence reading from the National Association of Home Builders on Wednesday. That's the NAHB. April's housing starts and building permits follow on Thursday. Also of note, look for April's retail sales on Wednesday and the latest jobless claims on Thursday. Thanks very much for MBS Highway for providing us this great information. If you ever want to get this directly, get to mbshighway.com. Otherwise, my name is Larry Bailey. Again, head over to awesometechinc.com to get all the information. And for goodness sake, if you're still doing manual payroll, or if you're the kind of business that loves to give draws out because you want to help your sales team kind of bridge that gap between sales, eCompensate is definitely something you want to check out, because you will never, ever, ever forget to withdraw that advance that you gave that person on the next payroll if you use eCompensate. So hopefully that helps you. We'll catch you on the next one. Thanks. Take care.